Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon and numbers you're probably tired of hearing about. Today we are diving deep into the annual shareholder report for Jackson Square Funds, specifically their Large Cap Growth Fund and SMID Cap Growth Fund. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below so you can connect with us and other finance fans. This report gives us a look under the hood of how these funds performed for the year ending the 31st of October, 2025. Think of it as a yearly checkup for your investments and more. We will dissect the performance, costs, and what really drove the numbers for these funds. Let us start with costs because nobody likes paying more than they have to, right? For the Jackson Square Large Cap Growth Fund institutional class, the cost for a hypothetical $10,000 investment was $82, that is about 0.71%. Now for the investor class of the same fund, that cost jumps up to $107 or 0.93% for that same $10,000 investment. It's a noticeable difference and shows how share classes can impact your bottom line. For the SMID Cap Growth Fund institutional class, a $10,000 investment cost $103, which is 0.98%. And for the investor class of that fund, it was a bit higher at $128 or 1.22%. Over long periods, these small differences in fees can really add up. Now for the real juicy stuff, the performance and what made it tick. For the Large Cap Growth Fund, they saw benefits from a market that started to separate companies that could turn innovation into cash from those facing pressures. The report talks about strong performance from Nvidia, Alphabet, and Canadian Pacific. Nvidia continued to ride the wave of its artificial intelligence infrastructure demand. Alphabet saw gains from better financial discipline and monetizing its AI efforts. Canadian Pacific performed well thanks to operational efficiency and strong pricing. MasterCard, Microsoft, and Amazon were the bottom contributors. MasterCard saw some slowdown as consumer spending normalized. Microsoft faced scrutiny over its big AI investments and near-term margins. Amazon's retail margin swings and high reinvestment overshadowed improvements in its cloud business. Looking at the numbers for the institutional class of the Large Cap Growth Fund, they posted a one-year return of 29.94%. That is pretty solid. Over 5 years it was 12.71% and over 10 years it was 12.80%. Now compare that to the Russell 1000 Growth Total Return Index, which had a one-year return of 30.70%. So the fund slightly underperformed this specific benchmark in the last year, but its long-term performance is competitive. For the investor class, the one-year return was 29.65%, closely trailing the institutional class. As of the 31st of October 2025, the net assets for the Large Cap Growth Fund stood at a hefty $182,522,190. That is a lot of money riding on these investments. The fund held 27 companies, and what were they invested in? The top holdings were Nvidia at 10.9%, Microsoft at 9.4%, Alphabet Inc., Class A at 8.6%, and Amazon.com at 6.9%. These four companies alone make up nearly 36% of the entire portfolio. That is a significant concentration, meaning the performance of these few giants heavily influences the fund's overall returns. Now for a big change, at a shareholder meeting on the 21st of November 2025, shareholders approved a plan to merge the Jackson Square Large Cap Growth Fund with the Spyglass Growth Fund. This merger was completed on the 8th of December 2025, so this report reflects the performance leading up to that merger. Let us shift gears to the Jackson Square SMID Cap Growth Fund. This fund focuses on small to mid-sized companies. For the year ending the 31st of October 2025, the institutional class had cost of $103 for a hypothetical $10,000 investment, that is 0.98%. The investor class was a bit higher at $128 or 1.22%. Performance here was driven by company-specific execution as the small and mid-cap space saw a lot of dispersion. Top contributors were Medpace, Aon, and Axelis. Medpace did well due to demand for outsourced clinical trial services. Aon benefited from strong demand for energy-efficient HVAC systems. Axelis saw gains from a demand in semiconductor equipment. On the downside, Stevanato Group, Align Technology, and SBA Communications lagged. Stevanato Group faced near-term volume variability. Align Technology saw an uneven recovery in orthodontic demand. SBA Communications was impacted by high interest rate sensitivity. The SMID Cap Growth Fund institutional class had a one-year return of 9.60%. That is a bit lower than its larger cap cousin. Over 5 years, it was actually a negative 3.41%. Ouch. And since inception, it was 6.24%. This is a stark contrast to the benchmarks. For example, the Bloomberg US 100 Total Return Index returned 21.38% in the last year. This shows that the SMID cap strategy really struggled to keep pace. For the SMID cap growth fund, net assets were $72,369,643 with 26 holdings. The top holdings here include Exact Sciences at 6.9%, MongoDB at 6.4%, HubSpot at 5.7%, and Aon at 5.5%. Unlike the large cap fund, this portfolio appears a little more diversified, with its top 4 holdings making up around 24.5% of the fund. Also, some changes occurred here. Effective the 13th of June 2025, one of the portfolio managers, Iron Ferry, resigned, leaving Kenneth Broad as the sole manager. Additionally, this fund also approved a reorganization with Spyglass Growth Fund, completing its merger on the 3rd of November 2025. Diving into the actual investments in the financial statements, we see that for the large cap growth fund, common stocks made up 95.5% of their net assets. The value of these investments was $1742682, $13. A significant portion of this is in technology stocks, 39.7%. Top individual holdings, Nvidia, Microsoft, Alphabet, and Amazon.com, are clearly driving this fund. The SMID Cap Growth Fund had $71,828,068 in common stocks, making up 99.3% of their net assets. Their investments are more spread out across different sectors, with information technology representing 41.3%. When we look at the costs to manage these funds, the investment advisory fee for the Large Cap Growth Fund is 0.55% on assets up to $2.5 billion. For the SMID Cap Growth Fund, it is 0.75%. The advisor has contractually agreed to waive fees to keep total annual operating expenses for the Large Cap Growth Fund at 0.64% and for the SMID Cap Growth Fund at 0.87%. These agreements are important because they directly impact the net return to investors. Remember that merger we talked about. The report details the shareholder votes. For the Large Cap Growth Fund, almost 83.3% of the shares voted were in favor of this reorganization. For the SMID Cap Growth Fund, a very strong 93.6% of the shares voted were in favor. This clearly shows shareholder approval for combining these funds. So what is the big picture here? The Large Cap Growth Fund put up a decent performance this year, heavily influenced by a few key tech giants. Its long-term performance looks respectable, but it slightly underperformed its closest benchmark in the last year. However, the SMID Cap Growth Fund had a much tougher year, especially over the last 5 years. Its performance significantly lagged behind broad market benchmarks and even its own category in the past year. The decision to merge these funds suggests a strategic move, maybe to consolidate or restructure. It will be interesting to see how the combined entity performs moving forward. The concentration in the Large Cap Fund in just a few tech names presents a risk if those companies falter. The SMID Cap Fund's past performance raises questions about its strategy and execution. Alright, that is our breakdown of this SE filing. What is your take on these numbers and what they signal for the future of these funds? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.